Jim, maybe you could provide some insight in terms of what we've been working on at Planning Alternatives to navigate this crisis.
I'd like to highlight three areas where we've been beneficial. First is just to serve as eyes and ears for clients who trust us to be the advisor. Jeff touched on, the economy and recession. Bear markets usually take the shape of one of three, or caused by one of three things. The Fed getting ahead of themselves with raising interest rates, causing a yield curve inversion and causing that. There might be a systematic problem like we had in 2007 or 8 with the housing market, or you might have a downturn caused by a one-off event. And for us, we felt very strongly at the beginning of this that the virus was a one-off event, and because the economy was really strong going in, that hopefully we'd be able to recover pretty quickly. So for us, it was trying to counsel clients on, this is the nature of the downturn. These are the things that we think are going to happen coming off of it. And we're wired as investors to be scared or afraid, or we're damaged more by losses than we are by equivalent gains. So first and foremost, it was to serve as the trusted advisor and make sure that we were counseling people through this tough time. Secondly, I wanted to highlight our efforts to rebalance portfolios. So what does that mean? As stocks went down precipitously and bonds were sold off, but then recovered pretty well and were good performers, accounts tended to become a little bit light on stocks for what sort of risk budget they were in. So a traditional 60-40 portfolio might look more like a 53 or 54% stock portfolio. We took the opportunity to trim out of the asset class that was performing well, bonds, and buy the asset class stocks that were underweight and that hadn't performed as well. And that's important to Jeff's point, because as internationals had kind of lagged, or some of the other sectors of the stock market, it was good for us to buy those at a relative low and not only get clients back in the right asset allocation, stocks versus bonds, but within stocks, we wanted to have the mixture of US versus international be good. And thirdly, we've taken the opportunity in this crisis to do tax loss harvesting where it made sense for clients. So realizing some losses that we can put in the bank that later on, if we realize taxable gains, would help us offset any negative sort of tax implications. So the three instances: serve as the trusted advisor, take this opportunity to rebalance portfolios, and tax loss harvest when it's been appropriate for clients. Those are the three biggest things that we've done in the midst of this pandemic.